What is going on, everybody, and welcome to another weekly update. What I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide technical analysis on Sundays and a daily pulse of the market on X at Hemi137. So you can check me out there as well. But before we get started, remember to hit that like button and let's roll straight into what is going to be a major week in just the market in general and potentially bringing a lot of volatility into the market. So, over the past week, we've obviously had core CPI and bank earnings. Those were some of the biggest stories that came out. We got some more really interesting information right at the end of close on Friday as well. So we're going to dig all into that. But before anything else, let's go ahead and check out and kind of dissect this core CPI falls to 3.2 below expected the 3.3% for core. Which is interesting. So the month over month actually rose, but the year over year actually dropped down, which was quite interesting. But the BLS reports inflation accelerated to 4.8. So again, the heavy manipulation that is going on with these reports all the way up until the very last one. We'll see how that changes in the next coming months. But ultimately, as of right now, what we need to keep in account for, and something I started to talk about, is oil is on the rise. Here comes inflation. So as we've noticed, inflation was already rising when we started essentially cutting about 100 basis points for the end of last year. The thing is that shouldn't have a direct impact on the market right away. What was going on was that shouldn't really have any kind of influence over the market for months from now. The fact it was starting to rise right after election, and something that was really interesting was oil prices were dropping substantially. Even OPEC tried to come in and start rising prices. They had a couple of different announcements going on, and still nothing happened with oil. Oil was selling off a little bit. It didn't completely plummet into the negatives like it did a couple of years ago, but it was selling off, and despite whatever they were saying. And then after the election, it started to rise. And the fact that it's rising way higher right now over the past, essentially since election, it's been on the rise heavily. So now you're seeing massive inflation. And that is not coming from your everyday American at this point. You have to understand that it's because the average everyday American is absolutely in a horrible position right now. And we'll get some of those things we've talked about. What's going on with the homelessness is growing like 18%. Again, one of the other statements here, the credit card defaults just at essentially the highest level since 2008 crisis, up 50% in a year. The 90-day delinquencies on home auto loans or auto loans and home loans have been rapidly increasing, which is largely concerning. So again, you have all these different inflationary acts. And what I keep talking about is if inflation starts to climb back up, your Mag 7 is going to lose strength, and that's where all your strength has come from. And that also means Bitcoin, because Bitcoin ties right in with big tech at this point. So again, if you start getting inflation running up, you're going to start seeing a collapse of big tech, and again, the rest of the industries are still extremely weak. But with all that being said, we obviously still, so not on top of the core inflation, which I think is heavily manipulated, especially when it comes to oil prices, because oils and metals are typically one of the most they're very heavily manipulated in general. And something I talked about this a couple months ago, saying that once we start cutting, you need to start watching commodities because things are going to start pumping back up, and then inflation is going to be a concern again. And that's what we're starting to already see. But with that being said, we also had bank earnings, and something when I came into these bank earnings, I said the top 10 banks aren't really a concern at this point. If something happens, it would not surprise me. But ultimately, what we are watching is the regional banks, because that's where all essentially the commercial loans are, and what's causing a lot of these banks to go under. And so with that being said, again, they all did fairly well. I think it was Wells Fargo and Citibank that may have hit on revenue, but ultimately, again, very strong from the Big Ten. Now, this up and coming week, we have a lot of more banks, so a lot more concerns. The more weeks we progress into this earnings cycle, we need to understand that it could be a very big problem as far as inflation And or as far as the banks are concerned, we might start getting more FDIC requests. Again, you have to ultimately understand, again, the Bank Term Funding Program probably has nothing left, and it had about 4.4 billion coming into this year. That is pretty much probably already drained, because after the first week, we already lost a billion. So we're probably pretty close to empty on the banks in themselves. Being said, you did have TSM, so TSMC, which is one of the largest semiconductor plants in the world. They have essentially crushed earnings, and something I said is that essentially what's is holding up everything. AI infrastructure. The problem now being is that as far as the use cases, there's very, very slim pickings when it comes to very strong use cases for corporations. Like, they need to start producing when it comes to AI. It's much like the .com boom, where people would just mention AI just to try to hype their stock up. So that's what you need to keep in mind. But overall, again, we will watch and we'll see how this unfolds. Again, a lot of the stronger companies will get stronger at this point, where a lot of the weaker companies will not. But one thing to keep in consideration, which I have not listed here, is that Meta, which isn't reporting until the Super Bowl week, which is we're still about a week out from that. They're starting to lay off people essentially that have any kind of they're lacking motivation at this point. They're looking for anything to fire people. And we talked about this a couple months ago. People were putting like random items, like household items, on their essentially food cards that they had for work, and they were being fired for that. So they're looking for any reason to fire people, because again, they just can't afford to keep people on payroll. They're cutting DEI programs. They're cutting all these other programs because, again, there was no need for it. And again, they are essentially working with skeleton crews at this point. And so that is the largely concerning part. So again, you can remain profitable and it could still look good for so long because you can only cut so much, but eventually you're gonna hit a ceiling, and things are just gonna implode at that point. So and so that being said, not this week, but next week, we also have UPS, which is reporting, and they've been falling off a cliff for the past year, just like Apple has been. Again, there's nobody purchasing anything. So even all these great numbers and stuff, again, very heavily influenced because there is nobody out there purchasing anything. Why are we at this three? I can't remember what the GDP is. The thing is in the threes right now. Is like, why are we even here without the massive spending? Because we've essentially spent $7 trillion. I believe it's been over 4 years. And we've been spending about $1 trillion every like 90 days over this past year. So that should kind of put things into an understanding of where things are at, and how it leads into some of these other things. So with that being said, UPS is closing a couple, several U.S. facilities. Obviously, big reason why, again, because there's no other money out there in the system. The only quantitative easing that's going on is on the backside to bail out the banks with, again, the taxpayer dollars. And now they want to continue to tax you to continue to bail themselves out. But with that being said, Gensler, first thing after 5 minutes out of the office, crypto ETF filing frenzy occurred, which was, again, not surprising at all. So it was interesting to see that. But also what happened, so all this stuff happened within the last like 24 hours, 48 hours. And then Moderna gets another 590 million for bird flu vaccine development. Now, back in July, they also got another 150 for this vaccine development. So this is what I keep talking about. They are constructing potential scenarios. Right now, they say the CDC has said it's not a concern, but the fact that they're constructing vaccines right now is leading to the fact that it's also could be a play, but it's leading to the fact that bird flu is going to make this big up and coming thing. Only one person has actually officially died from this bird flu. That may accelerate. We don't know. But again, they are planting seeds, and that's what's largely concerning. Now, that being said, we are also getting, over the past couple of weeks, probably about 2 weeks. I mean, they've even talked about this before the election, but legacy media is essentially leaning towards Trump plans to promise another great recession. So you're seeing different wordsmithing of this going around, that Trump and recession, Great Depression. You're seeing these headline news go out there. And this is something you need to understand, is that the algorithm in which controls the market reads off of headline news. It doesn't read off of revisions. It doesn't read off of Twitter posts. It doesn't read off these things. It reads off of legacy media, and they know this. And this is why they've been trying to shut down a lot of social media and try to have more influence and control over it, which again is taking away free speech, but ultimately understand that they know that controlling that algorithm will help them dictate the markets, and understand that it may seem like a free market, but it's, again, the more you dig into the stock market, it's more of a Ponzi scheme the way you look at it, because again, the house always wins. This is why it's majority of people, you need to be investing in the long term or doing long-term swinging, because of that fact. Because again, the way the algorithms work, they always try to stop you out. They're always aware of where your stop is in your stock, right? And so ultimately, understand they are aware of all these things. That's why I go supply and demand, because normally banks are aware of these supply and demand zones, and they try to spike it down past that, so that way you can at least tag you out, liquidate you, and then that's when they typically make the big moves. So with that being said, you have all these things going on. You're getting this information planted about another great recession with Trump. And then on the final day of the final hour, you have Yellen coming out saying credit insurance suspension period to begin on Tuesday. So January 21st. Not only do you have debt insurance suspension period, you also have her coming out and saying that the Treasury is going to have to take extraordinary measures on the second day of taking presidency. This is the same lady that told you everything was strong and resilient a year ago, then just apologized a couple weeks ago, and essentially saying, hoping that the next administration takes things seriously, and then offloads this whole debt bomb issue that Trump has got to deal with as soon as he comes into office. So again, trying to be objective here, right? You have to just see the way things are going on, because what you're trying to do is understand how the market is being manipulated, so you can take advantage of the market and not be over leveraged in a period like this, where there's a lot of seeds being planted about particular things to potentially set some things up. So again, there wasn't a lot that went on, but there's really impactful stuff that's happening right now that is going to lead to some big issues coming very, very in the short term. So, and I do believe Trump can make it a very bullish market, but there are a lot of things that need to take place. And the fact that a lot of things have been sold off, a lot of money has been spent, billions of dollars more have been sent to Ukraine, even though they're talking about a potential ceasefire and war and peace already. All these things are occurring, and we're still sending billions of dollars out for no reason. And now you got fires in California, and you got the Southeast that's still been ravaged by hurricanes, and now you got a huge polar vortex. So all of a sudden, you're getting these massive climate change storms, and then you got to deal with all that, plus all your piggy bank was essentially exploited, because now all that money has been essentially sent to Ukraine, which is essentially a kickback for the military industrial complex, so that they can develop more weapons and more vehicles, or whatever the case is, because that's how essentially those packages work. And then there's obviously a drip off of that into other people's pockets. So again, very interesting setup coming in. Now, this upcoming week, obviously, we don't have a lot of things going on other than the inauguration, which the market will be closed on Monday. So you do need to keep that in mind for Martin Luther King Day, but it's also Inauguration Day. So again, what we need to pay attention to is, as soon as Trump gets in office, what policies are going to be signed into. That's going to be your headline news for the week. So there isn't really a lot. As you can see, there isn't really a lot scheduled. I think we get some data on Friday. Not impactful data, in my opinion, at this point. Again, during certain periods, it may be impactful, but right now, the hugest focus, the most influential weight on this week is the policies that Trump is going to initiate in his first week in office. Whatever other events are going to occur around then as well. Again, you have to understand, because of the cold weather, Trump is actually moving the inauguration into office. I think there's only going to be senators and House representatives there. I don't think there's going to be anybody else there, which is very oddly concerning. So just keep that in mind. in general. Well, what's being set up, and this is all coming within a couple hours. You got a couple days before this actually occurs, so very, very interesting. Yes, we did pump going into the back half of the week because of Trump coming into office. Is that just essentially buy the rumor, sell the news kind of thing that's going on here? Very strongly could be, because you have all the debt issues and all those other issues that are occurring in the background. We will have to watch and we will have to see how these events play out. So upcoming events, next monetary policy is not this week, but next week. During that will be going on during Super Bowl week. So you get monetary policy and Powell on 1 week with, again, all these stocks reporting. So next week is going to be extremely wild. So not only do you have whatever policies are going to be changed this week, which will be heavily influential, then you're going to go into next week and it's going to be even more impactful. So again, right now, yes, Big 10 banks are good. Yes, your semiconductors are good, but that was anticipated. Again, over the next couple quarters, things are going to rapidly change, in my opinion. Trump is going to have to do a lot to try to climb out of the debt hole that we're currently in and make sure that he has enough surplus of cash to make sure this thing doesn't collapse on itself. So next core inflation is until February 12th. And then we're going to review the calendars. The calendars are back because we are getting into the bread and butter of earnings. So we'll start doing the calendars here. And then this week, anticipated, it's a little higher than normal for SPX over the general index. Even last week, it was up like 120. So this is why expected moves are always good to kind of watch and see, because depending on what is actually scheduled, that will kind of dictate on whether you're going to trade options for that index, that stock, whatever the case is. But it shows you the impact of that event. And so expected moves are great to foresee what could potentially happen, because if a unforeseen event occurs, you could take advantage of options if it wasn't priced in, right? And I talk about them pricing in the end of the world does occur during specific events, and I bring those up. So Tesla's at 30. So again, very, very high for Tesla. Tesla's being a lot more active now, especially with Elon Musk and Trump and everything going on there, and the potentially FSD, humanoids, all those things are starting to come into the circulation of mainstream media. So you have to understand that in Wall Street will start picking up on humanoids. And once that takes off, I think Tesla will really take off. So you're starting to see more of that stuff getting priced in. BA is roughly around the same, around 6. Nothing really big change there. JP Morgan is a little bit higher than normal. It's sitting at 6. We've gotten out of earnings mode, so that number is coming down. But again, this week, we are still reporting a lot of bank earnings, and those will be important because, again, regional banks are our primary focus coming into this, along with obviously big tech, but regional banks largely concerning with what's going on with the Treasury, all the money being spent. All the regional banks are going to be a huge, huge focus moving forward. So that being said, one of the favorite times is to jump into the schedule. Again, shout out to Earnings Whisperer for coming out with this epic schedule. It's always great to see kind of see what you could be focusing on during this upcoming week. So this week, again, starting out, again, inauguration will be on Monday, so I'm not really anticipating anything big there. There is banks being reported. Charles Schwab on Tuesday morning will be important. KeyBank important. These banks are going to be more important than the Big 10 banks, I'm telling you right now, because, again, if they start folding, you can cause a lot of worries and concerns moving forward. So you have a lot of banks Tuesday morning to start us off. Netflix will be big, although I do believe their subscriber count will not be disclosed anymore. I think that starts this year. So we may not get that subscriber count. That was a good gauge on where essentially the consumer is at if they're looking for cheap entertainment. So you need to keep that in mind. But as of right now, Tuesday after close, that's probably the biggest earnings for the week. Aside from these bank, you got Capital One. You got Zion, you got Discover, Ally. Those will be important. Travelers will be important. Johnson Johnson will be important. P&G will be important. You have a lot of dividend kings reporting this week as well, which is going to be interesting. It'll give you more of a pulse of the market where people are at. The fact that people have been splurging on diapers and stuff as well, and on the grocery side of everything, is because they can't spend money anywhere else. They just don't have money. And you've seen the credit card, like I talked about the credit card debt just increasing double just over the past year because people are struggling very much so. So then we got some GE earnings is going to be important. American Airlines will be important for travel. So trying to give more of an understanding where people are at. Again, a lot of bank earnings this week. So it could be setting you up for some really bad headline news this week. And like I said, it's primarily focused. Texas Instruments is going to be a good one as well to watch as well there. You got American Express and New Era Energy would be important too. But again, as you can see, this is flooded with a lot of these not Big Ten banks. And so not only are you going to have new policy being implemented by Trump this week, you're also getting tons of potential landmines going on with regional banks, smaller institutions that up to this point have been bailed out secretly. 1,000 of them just a couple months, about 2 months ago, went straight FDIC without any kind of headline news. You lost 1,000 banks. You're closing, all these Big Ten banks have been closing branches all over the place. And then now, again, Bank Term Funding Program is out of money. So what could go wrong at this point? Because you know that Bank Term Funding Program isn't going to get any more extra cash because we sent a lot of it to Ukraine to feed essentially the military industrial complex. And then not only that is you have all these wasteful programs that aren't needed. And this is why we've talked about, how we need to dial back on some of these programs because you're regulating the regulators for nonsense things that don't need to exist. But that's the bad thing about allowing government to come into all aspects of your life is they keep regulating smaller and smaller details that don't need to exist. This is what should be a open free market, and now you're heavily influencing that with everything that's going on. So we got a big week coming up. I'm more so looking for next week, the Super Bowl week. But again, I think there's going to be a lot of stuff that occurs this week that's going to obviously influence what's going to happen over the next 4 years, especially with the new administration. So that's ultimately what we're watching is the banks, is Trump and policy, and seeing how that is going to influence the market. Again, when he was in the first term had a lot of volatility. And there was a lot of events that were manufactured to kind of set him up to where he was towards the back half of his term. So again, we will watch and we'll see. A lot of things seems really suspicious, but again, not trying to get into conspiracy theories here. You just need to be aware of them and not be over leveraged during a period like this. You want things to kind of settle. Again, largely concerning is price action has been extremely weak coming into this earnings. That is not normal. That is largely concerning because even if they do well, you may continue to see more weakness. So again, we will watch and we will wait and we'll see what happens when Trump comes into office, and then we'll take it from there. So if you've made it this far, go ahead and drop a like. Throw down in the comments what you're looking at this week, what events you're looking at, what earnings you're looking at, and I will see you guys on the next one.